You'll learn that share profits are big, over 80%, with safe, fast profits even in a slump. You'll meet smart neighbours who've made millions and discover their trading strategy so you can make jumbo-sized profits too. Plus, you'll see what shares to buy. Yes, your wish for extra money can come true. Hi neighbour, it's John. First, I want to thank you for being a good friend and neighbour, and so I've made this free video series on how to beat the fat cats and make extra money. I know you've had money difficulties for 15 years since the credit crunch and market crash. I share your problems and used to suffer like you. Now I'm returning your kindness. Here's my story and how I solved it. I'm a financial wizard and I love the stock market and how it impacts the economy. I qualified as a management accountant and as a chartered member of the Securities and Investment Institute. I worked as a management consultant in the City of London for 40 years and became an expert in financial services and share trading. So I've seen city firms close up and know how they fool you. I was stung like you and finished up with very poor returns on my pension fund, endowment mortgage and with profits plan. After I got burnt for the 4th time by the government ruling which bankrupted the Equitable, I decided to use my creativity and problem-solving skills to answer 2 questions. 1. How do you make jumbo-sized profits with shares safely in a slump? 2. Why is the financial suckers industry so bad? I found the solution in the internet market revolution. We've had 15 years of poor returns by everything, from savings accounts to fat cat funds, because fat cats still control the market despite the best efforts of governments and regulators to improve things. Fat cats don't pay billions in fines and compensation, but customers do. However, smart home investors are winning. They use the internet. It's the key which unlocks the fat cat cream to the market revolution. As Charles Darwin said, it is not the strongest of the species that survives, nor the most intelligent, but rather the one most responsive to change. Just watch this 30-minute video and follow my step-by-step instructions to solve your money problems. So let's start an adult conversation about shares and survive together. Warning, this video contains graphic images, shocking news about fat cats and shares, and important disclaimers about everything. And of course, no animals or humans were harmed during the making of this film. When I first started work as a young man, I entrusted my long-term savings to the fat cats like you. I mean, their story, shares outperform everything over the long term, is so convincing. And you've seen their chart, how shares rise exponentially above everything. Down the bottom, savings only average 3.5%, while inflation is about 2.5%. So you trust them. After all, they're the experts. In reality, the top line represents the share index, not your fund. Your fund's average return is never shown on the chart like this. Your fund's return is about 5%. The end result is, fat cats make money out of you, but you'll never make money out of them. However, smart neighbours are making millions, so you're better off looking after your own money yourself. Fact 1. Fat cats are cowboys. They don't make much money for their clients. The truth is, 70% of all funds fail to beat the index, and 90% of investment advice is bad, because fat cats cover up their overhead costs and commission payments. Fact 2. You only get 5% from a fat cat fund. That's only 1.5% above your savings rate. That's not a good risk-reward ratio, taking all those stock market crashes into account. Fact 3. The FTSE index hides a strong upward bias, which glosses over the true state of the market. So the initials FTSE, which stand for Financial Times and London Stock Exchange, I've renamed as False Trend Strongly Exaggerated, because the index is changed every quarter by the review committee. I bet you thought that the FTSE index comprised a constant group of companies, but you'd be wrong. Its constituents are always changing. This is the FTSE fiddle. Every quarter, up to 4 of the worst stocks are dropped, and they're replaced by the 4 best ones. So the index has a strong upward bias. Over time, This gives the index its magic appearance, an exponential upward curve, and why most fat cat funds fail to beat the index. Consequently, fat cats disguise their lack of performance by comparing themselves with the sector index and not the FTSE. In contrast, the Dow Jones Industrial Index is a true measure of the American market. Its constituent companies have only changed 53 times since it started 130 years ago in 1885. So why aren't you buying shares to solve your long-term money problems? I know, because you're afraid of losing more money. You lost it in the past with the fat cats and your own share dealings. You're afraid shares are just gambling, afraid you lack knowledge of how the market works, of what to buy and when to sell, afraid it'll take too much time, and you've no city friends and no inside information, plus a lot of other nonsense, but more of that later. Your natural caution is good. Now I'm going to reveal the secrets of how it's done by smart neighbours. Here are three ordinary guys, Nicholas Darvas, Dan Zanger and Jayesh Manek. Nicholas was a dancer, Dan was a labourer and Jayesh was a pharmacist. They're smart neighbours who beat the fat cats by a mile and made millions. My first smart neighbour is Nicholas Darvas. He made $2 million in the 1950s stock market boom. He was a successful ballroom dancer. He danced internationally with his partner Julia, appearing with Judy Garland and Bob Hope. As Nicholas danced around the world, he studied Barron's, an American stock market magazine, and developed a smart trading plan. He received daily share price data from his stockbroker by telegram because there was no internet in those days. After he retired, he wrote several books about shares and was featured in Time magazine. My second neighbour is Dan Zanger, who holds the world record for the largest stock market profit ever made in a year. When I ask people how much percentage profit do you think he made in 12 months, I'm usually told about 500 to 1,000%. In fact, he made nearly 180,000%, turning $10,000 into $18 million in the dot-com boom of the 1990s. Dan was a college dropout doing labouring jobs like building swimming pools. He started trading after seeing his mum trade shares. He bought his first stock for $1 and sold it for $2 a few weeks later. From that moment on, he was hooked and is still investing from home today. My third smart neighbour is Jayesh Manek from Ruislip, who made a 50-fold paper profit. He was a pharmacist who won the Sunday Times stock market competition in 1994, turning a notional $10 million into $500 million. He beat 40,000 people, winning the £100,000 first prize, and the following year he won it a second time. Next, he was invited to manage a share fund professionally. They named it the Manek Fund. Initially, it grew rapidly during the dot-com boom because many investors believed he'd deliver outstanding profits. But it slumped in the crash. Over time, the Manek Fund performs worse than other funds, and the number of investors has fallen from about 26,000 to 16,000. It is often named as the worst fund in the Hall of Shame, but it's never performed like his Sunday Times Fantasy Fund. Now, Nicholas, Dan, and Jayesh made their millions in boom periods, but they all had problems when the market crashed. So the real test is, can anyone make big profits in a recession? Well, the answer is yes, I am. You see, I got fed up losing money with the fat cat funds, so I used my skills to discover new stuff about the stock market that's not in any textbook. I discovered a shares crystal ball to forecast share prices with a high probability of success, often accurate to the penny, up to 1 to 3 months ahead. I have 4 years of public proof displayed on Twitter for everyone to see. My publicly stated target is 80% profit, and I'm achieving that target despite the recession. You can see my real-time forecasts and trades on twitter.com. My accumulative profit is 1,042% over 4 years. That's compound growth of 84% in a slump. At the start of this video, I'd said I'd tell you what shares to buy for more money. Well, you can. Join Twitter and follow me and copy my trades for free. Remember, share profits are bigger than you think, they're safe than you think, and faster than you think. I love stock market crashes for their jumbo profit potential, because a 50% crash becomes 100% profit when prices recover back to their old levels. Next, you'll discover the difference in trading strategy between fat cat funds and smart neighbours.